Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Monday, February the 6th, 2023. Kind of an inside day, even though we did go down and barely create a slight new low during that last hour or within the first hour of trade. And we produced our high for sessions within the second hour of trade. And then basically just traded within that range and didn't do a whole lot. The market is waiting, obviously. We do have a bunch of things coming tomorrow that I think they're going to hedge on, and they're waiting to see, and that is that Jerome Powell will be speaking midday, so about 12:40, I believe, Eastern. He is appearing somewhere, and he's going to be speaking. And I know a lot of traders, a lot of institutions are going to be listening in to see if they can get a further hint of how does he feel now after seeing the employment situation report that was out last Friday. And this is after they're making the decision in his press conference on the previous Wednesday. So I think that's like if there's going to be any changes, that's what we're going to hinge on, and that's what people are going to trade off of. It's unfortunate that it seems that we're always, or the market is always waiting for some information before it can make its next decisive move in terms of direction. And being that I can give all the Elliott that I want, but it's going to be up to the market. The market is going to tell us what direction it is headed and where it's going, based on the information that it can receive. Now, what we did end up seeing today is initially, right out of the gate, which is right off from that opening, we saw again a very strong push that lasted right through until the second hour. So it was until approximately 11 o'clock when we reached the high, or in that 11 o'clock hour, that we reached that high, and it was in the 10 o'clock hour that we reached the low. So pretty much from the opening and then until 11, we had gone low to high. And what really propelled a lot of that buying within that first half hour, and actually the first hour, were just the massive buy orders coming back in to Tesla, to Meta, and then we did see some in NVIDIA, but NVIDIA got stuck a little bit more in the intraday play. Originally, we saw Apple being pushed or held higher. Then we saw a drop back down towards that 150 level before it recovered. So these plays continue to be in. And again, what I am attempting to do each day is just kind of get a feel via the SPX and the ES options that will be expiring on Friday as to where they're lining things up, where that call wall is going to be, where that put wall may be. And that's what I was doing this morning in my trade room, and I will try to do that again as it's being left now. And it's a little bit more difficult because they have not processed all of today's trades and to put in the new open interest within the markets. But I can take a look at individually within the Qs, basically, and we can use the spiders or the ES. And actually, you can use the SPX, but that's going to be the cash market, and that's what it's going to be based on versus how much more do we have to add in for the premium in the future. Nonetheless, it is kind of a boring day. There's nothing really to be adding. I'm not filling any of this count, any of the labeling, but I will tell you where I'm leaning. I am leaning to this being wave 5, the completion of wave 5, and in turn that intermediate B wave, and that we are starting to move lower. But there's still possibilities that we could run, in which case then I got to go figure out what is all this and then into this. So one other thing that comes right out of my head, which would be very strange to consider a minute fifth wave to be carrying so much power and to be really putting this together, because, oops, what I need to do is I'm counting off of this low. And at best, I have to count it off of this low. So it really kind of starts to turn into what the heck is really going on. Because if I have to move this and put the B wave actually over here, because that did move to a new low, I think, but even I think on a closing basis, it didn't, which is why I've left it there. Yeah, it didn't. So on the closing basis, it's a 1 and a 2 because it's 3 up, 3 down. So 1 and a 2. And so leaving that as is, I just have to 1, 2, but we're going to go even smaller in this count, and then try to determine if this where the 1s, the 2s, and the 3s, and the 4s, because if I have to extend this up and call this 3 and this 4, then we do still have that fifth wave yet to come. So, but how far do I want to extend it? That's really also even on an Elliott basis. But if we're just on a trading basis, on a pattern basis, on just what the market is actually doing, I would have to consider that this did complete it, and now we're beginning the next phase lower. But I got to go back to that candle chart, and when I open it up, even on my 4-hour chart, you can see that the squeeze kind of finished up. Squeeze today was like, don't trade. See, red dot, don't do it. So you could have kept all your powder dry, or you participated on a much shorter term basis, and you made some money. But here again, if I'm looking at this very strongly can be 1, 2, 3, 4. Now again, this 4, this 2 against that 4, it doesn't really play out under the guidelines that Elliott gave us. But as I've been telling you, that it's very much in today's world of trading, and since everything is quantitative, everything is algorithmically controlled, it becomes more difficult to really kind of contain a wave under the tutelage of what Elliott left us, what he wrote and what he left us. And for that matter, even in Frost and Prechter's book, which is the standard bearer of text books for Elliott wave right now. So I know that there are a lot of differences that could be added into this, and that for one thing, this could be an ABC up. Or so is it a wave 1, or it's a 3 wave? Is this 3 wave 1? And then, it becomes more difficult, but I'm open to interpretation, but I'm not labeling it because I don't think it's over, because the market has not given me the strength to actually make a call to say that that's it, because of how it continues to trade in basically a 3-wave pattern right now. So until I can get 5 from off that high, I have to leave open the possibilities. Now that remains the same. So rather than just spending a whole lot of time regurgitating the same thing, let's get right down to the meat and potatoes here. And basically, there are no changes. The market stuck to a pretty tight range once we got open. There were some good trades. It was possible to right off the opening, to be honest with you, to make your money and be done. Go off and do something the balance of the day. And so we're waiting. The market is waiting. And again, tomorrow, Jerome Powell. And we'll see what happens. But after he speaks, or what he will say, and then again, how the market is going to choose to interpret that. So no real updates, but if I look at our moving averages, they're still unchanged, except now the 20 is going extremely flat right here, right at 12,496. So pretty much right around the 12,500 level is we're kind of getting stuck, and we're hanging out a little bit above, a a little bit below, but basically hanging out right at that line, which actually is a fib support and resistance line for this larger move. So it wants to hug that right now. We still continue to have upside potential. And once again, I could probably add, let me see how I would want to do that. Even if I just do it from here, which is the end of the second wave and the start of the third, and we're just going to do that to there, we still can do that fifth wave, if indeed I'm going to include this as a part of this move. Now we've added another layer. We again, right where we are, we've got 12,455 to 12,496, right where we are. We're hovering around in there, and we're not really busting either side. Then we would have also 12,636 to, I won't use that number, but 667. And then we have 12,780 up to basically 12,800 to 12,815. So there's another cluster. And again, we continue to have them all the way up. 12,903, 12,950, 13,000, and then up to 13,008, and then 13,096. We got a double there. So we got 93 to 96, so call it 95, and then 13,160. Now, if it wants to go the full Monty, which is the 100%, then we're talking 13,350 to 13,340. Again, that could be taking us above this X wave, and I don't necessarily want to go above that X wave. I want to keep it underneath. So that's that level, 13,740, I believe it was. It's going to be right there. Yeah, 13,740. I'd like this wave to maintain itself below. So, and then, start to do the reverse. The other thing that I'm getting a lot from traders is like they are looking forward to trend picking up again. When the trend remains down right now, and these are corrective counter trend moves, and so we're really looking for it to get more recognizable. I don't care if it goes up or down. Let's just do some trending so I can get some more decent trades, and they're going to become more apparent. So that's kind of the gig for us right now. Same levels coming off. And if it's going to come down, it needs to start breaking. So until it does that, we leave that opportunity that we're going to go up. And then we're going to continue to watch the development of the wall. So in other words, the market's going to tell us where it's going to gun and what the range will be moving closer to Friday. Okay, in the S&P, it's pretty much the same story. I've removed all the fibs. We'll put them back on. But here again, I have no changes. We can see, if anything, this is going to get moved. And this is going to be still a 4. Instead of a smaller internal 4, which actually it's now kind of getting itself pretty close to 4,100, then 4,090. That's major level. The market knows that. Also 4123 to 25, major level, institutional level. If we break it down and we take a look at the hourly chart, I want you to see this. Maybe you already did. Look at the 4, look at the 8. The 8's the yellow. It's a major line of defense for institutions because look what happened. It controlled the market all during Globex and then all day. And continues to. Trading above, it'll trade back below. It'll trade above, it'll come back down to it. That's the safety area. That's the area. So we saw it all day long. Traded above, it came back. Traded below, it came back. Traded above, it came back. Traded above, it came back. Traded above, it came back. Traded below, came back up too. So no matter what direction it was going in, it might have plowed a little bit lower, but it rallied back up because that's where they were going to close it. That's where their safety zone is. That's where they can deal. So right now, that's the peg. 41.25. That's the peg. Everyone's happy right there. I believe that's going to be changing pretty dramatically as we get closer to Friday. But if not, then, if that's where they're going to hold it, that's where they're going to want this to expire in the S&P. Now here, again, the hourly chart, we saw the 20 come back down below the 50. The 200 is flat, slight upper angle, but basically flat. The 8 flat. This is the hourly chart, flat all day. The 20 flat, but back below the 50. So if these things continue to go, and now we slowly start to drift down, and each time we're getting another couple moving averages down below that 200, it's going to start to line up to continue to go down. Right now, we're sitting in a range, and that's indicative of what's happening with the moving averages, which is basically 0. So really, I'm not going to update the label. I know what the pattern looks like. I know what this pattern looks like. It continues to leave open, and let's just take a look how it got left today in the ES. And then I'll go over and I'll take a look at the Qs. Again, what we're looking for Monday, Tuesday, Wednesday, Thursday, here's Friday. So, and you can do this actually every day, folks. Monday's done. We can go look at Tuesdays. Nothing really there because it'll happen tomorrow. But you're going to see how it can line up for tomorrow. And maybe they'll be starting to work it up towards where could this be. Right now, 4,200, still not much traded. Right, so it's still pretty solid open interest here. So not much has really taken place yet. So it remains 4,200. But we got a little bit here still at 4,150. So we got a range kind of building up here right now. And then we got it down at 4,100. So guess what? 4,100, 4,050, 4,150, 4,200. It's the butterfly. In the calls, I had nothing in the puts except the 4,100s, the 4,150s, and that's really about it. So that's a small spread. Maybe some of it's also a butterfly, but not that much. So we're not getting a whole bunch of clues right now, but we're going to continue to monitor this. Some of the other ones that I've been checking in, and let's just take a look at the NDX. Not so much. We're going to go out to the 10th. Nothing. So we're not getting any clues from the NDX options and so, but not that I really anticipated that we would. This was today's, and it's so low. It's so low volume, no volume. So that's why we go to, don't think there are options on the NQ itself. Well, there are. Okay. So I've never traded them. That's why I said that. But we're going to go to, we have Monday, Tuesday, Wednesday, Thursday, and here we have the Friday options right here. And you can see 12,400, 12,500, 12,600. So the options are not really clear. And we got the same thing going on in the puts. So not really useful, but you can kind of go over and take a look at the Qs. And again, we're going to look at the 10th. Much more active. What do we got going on? 305. Okay. And then we have 310. That carries the biggest weight right now. Then we have 313. So we're starting to build a little bit of a window here. 305. 290. So now you're getting a window. 290, 295. Not too much today, but that's coming in. So that still has a big open interest. Is it going to be a floor? Is it going to be the ceiling? I think more the floor right now. And then we have the puts. So we got a straddle. We also have the 290s. We have a straddle. So you're starting to see that they're honing in on different strikes. And right here we got this one, just the calls, 310. 310 put, not that big. What's bigger? 308. So, and then we have 300. So you're going to look more towards that round number. And so right now, we're continuing to look at 310. 313, just it's out there by itself, actually. And in the puts, not much except right there. The 300 put traded pretty large today. Is that a put wall? Could be. So we're starting to watch the development between 310 and 300. Okay. Put wall, downside would be on a break. Call wall, a break would come above 310. All right. So what are we looking for in terms of tomorrow? I'm looking for the continuation of these things to develop. We may not get very much. No, I didn't mean to do that. I meant to do this. We may not get very much. Pretty slow start to Globex. So nothing really to be adding. I am going to leave it right there. Let's try to keep this a little bit more condensed. Again, Jerome Powell tomorrow. As far as numbers, as far as figures economic-wise, Tuesday, international trade in goods and services is 8:30 a.m. Eastern. It is marked red. So that's going to give us some additional hints because we did get some confirmation that productivity is picking up and that it will help on when we start to get the GDP and other things out in a week or two. So that's it. Again, tomorrow, Jerome Powell. He's not even on this schedule, but we know he's going to be talking. That much we got. And then further in the week, we got John Williams hitting the stump on Wednesday. We got, there's somebody else each day. Somebody's out there. Patrick Harker on Friday, et cetera, et cetera. All right, I'm leaving it there. Our next update will be on Tuesday, the 7th of February.